Good evening, good morning, everyone. Welcome to the Sunday Weekly Show. And I think we have, who's that? Julian. Hi, Julian.
Hello, Lloyd. Hey, guys. How are you? And hello, everybody, wherever you are in the world. Welcome to Sunday afternoon, Sunday evening, or wherever it may happen to be, Sunday morning if you're based in Europe. Welcome. So I think with Paul being AWOL in Sydney and my bad hairdo, what we're going to try and do is get through the next 10 minutes where we're talking about the macro market environment and maybe what we're going to have for the week ahead. So look, just a quick recap of where we are. I think I would classify last week as about as boring as it gets until Friday. And Friday was a pretty key and significant market day. The price action, as I'm sure most of you know, was pretty awful and very US dollar related. So very anti-trend. The current feeling for the last few weeks has been that the dollar is going to go down and the US dollar is going to go down and the other currencies are going to do better. Maybe with the small exception of the Canadian dollar, that was pretty much reversed on Friday, and we saw a significant amount of selling across a major number of asset classes, not just in the currencies, but also in other commodities as well too. So gold had a bit of a bad day on Thursday and didn't really follow through on Friday, but sort of sat on the bottom of the price action from Thursday. And the stock market in the US, I believe, opened a little higher on Thursday, sold off significantly, and then Friday followed through with that price action to close pretty near the lows of the week and also near the lows of the trading range. This is really important for me. So for a number of weeks, I've been saying that there will be a point in time that the US asset market, US stock market especially, is going to look at maybe a realization that there's a huge amount of supply around in the stock market right now, and the demand maybe is starting to dry up. And I think possibly that we're starting to see that really come through in the price action. It's been happening in various sectors, but it hasn't been happening in the overall market. Sometimes you get these sector rotations, which are quite common around a market top, where one sector deteriorates, where another sector comes back. And you start to see sort of volatile price action, but the overall index remains relatively benign and often, in fact, climbs to a new positive level. Well, the last few days, what we've seen, in fact, is that if you like, that distribution, that consolidation in the market, really start to struggle a little bit, and I think start to get to the point where the market's feeling a little bit heavy. And I think that's how I probably describe it, as being heavy. Is it a bear market today? No, of course not. Right? We've had one bad day. We need to give the market a little bit more time. But what this means, and the reason why I'm focusing on this today, as well as possibly a rise in bond yields over the course of the last few days as well too, is really we need to be conscious that a rally in the US dollar, a fall off in some of the fairly amazing multiples that we're seeing in the US stock market by the prices coming back a little bit, to some extent is a sort of a natural corrective element. The market maybe should try and go sideways for a little bit, if not a little bit down, to give people an opportunity to rebalance and think about whether they want to try and push ahead again. So at the end of the day, really what I always try and focus on when I look at these things is demand and supply. And there's been a huge amount of supply come to market. And yeah, there's been a significant amount of demand. If you look at the last 6 months, I believe the amount of inflows into stocks has been greater than it has been in the last 12 years combined. But that's yesterday's story, right? Tomorrow's story is there's still supply coming to the stocks. And if the demand doesn't keep up at the levels that we've seen over the last few months, then the inevitable is going to happen, right? You know, supply will win out and prices will start to fall away a little bit as we try and get to a more reasonable valuation by historical standards. So, blowout week for earnings. We've got a stimulus package that was unbelievable. You know, there's an infrastructure bill that's coming through, which is significant. The Treasury is trying to spend cash like absolute crazy. Some of the stuff left over from the Trump era. All of that has taken place in the last 6 weeks. And we're not seeing the market really trade that well now. So I'm cautious. I think there's going to be be a very interesting week going forward. I often say this, actually, it's going to be an interesting week going forward, but I think this time it probably is really going to be interesting. If we see follow through in those stock markets, what is going to happen to that US dollar? Is it going to continue to rise? There's a lot of people who are long of non-US dollar currencies at the moment. There's a lot of positions invested in the US dollar continuing to go down. If that is reversed for whatever reason, and sometimes it's just that demand and supply, buyers and sellers argument, if that is reversed, then we're going to see some more substantial corrections. So my call is Friday will be interesting. Monday is going to be far more important. So if we see follow through, and this is my big theme of next week, what is the follow through going to be? If we see follow through to the downside in the stocks and follow through to the downside in the US dollar against some of these currencies, then I think we're going to see some significant price action and volatility will pick up and will not recede, as you'd normally seen in the past with these things. Sometimes you get these big one-day corrections or two-day corrections happening. The market settles down and goes boring while it claws its way back. This is why follow-through is so important. So Monday, Tuesday, vital days to me to see what happens in the markets. From a fundamental perspective, my sense is we're still living the dream of earnings announcements in the States. Some of them have been incredible. You've seen the blowout earnings from a number of the big tech companies and what that's done for the market. In my mind, they've been amazing, literally amazing earnings for that first quarter. But the follow through has been pretty rough. So that suggests to me that most people already own those stocks in the first place. And who's going to be the new buyer coming in to push it to new valuations? And I think that's the critical thing, right? So a lot of people are very positive on stocks, which means they probably own them already. Less so in the bond market. I suspect they're probably short there. And so we're going to see some very interesting price action, I think, occurring in both those bond and stock markets for the next 2 or 3 weeks. That's really pretty much it for me. I think, cycle-wise, we're at a point whereby, if you go look at some medium-term cycles, I did that, showed you, though, you guys that work about 3 weeks ago. We're at an inflection point right here, right now, going back some time. So again, is this all normal that we're going to see a correction? Well, yes, it is. And what does that really mean? Let's get a bit of perspective here. We lose 10% in the S&P. What does it mean? Well, actually, it doesn't really mean an awful lot. So it doesn't mean an awful lot for the economy. People are pricing in a recovery that's already priced into the market. What will derail that recovery and derail the market from here on in would be a resurgence of COVID, which quite frankly seems unlikely in the US. They seem to be getting on top of it. That's not the case in India, and I feel for everybody there. It's a truly horrible situation and terrible underreporting, I suspect, for the actual numbers. Everybody I read and speak to out there seems to think that there's a real crisis going on. So, we obviously wish our Indian friends and also some of the surrounding countries well in their journey and their battle through all of this. But the reality is, are they going to hold up the world economy because of it? My suspicion is probably not. The recovery is pretty much well entrenched, and we need to give this a bit of time. But any hiccup there will probably add fuel to the fire if a stock market correction was to occur. So that's my theme for the week, follow through, and we're going to see what that looks like in the price action. This is one of those occasions when probably you break the low of Friday, it's actually more significant than you think. It wouldn't necessarily be a buying opportunity this time around. And that's pretty much it for me, Lloyd. Thank you.
Thank you, Julian. Yeah, actually, recent weeks, or I would say recent months, I've also been playing observation during the Monday Open to see what the market's going to go. I think that served me pretty well up to now. Yeah. And given to what you just said, actually recently I acquired a new bond. I think it was Rakuten. That was pretty good. And I'm still unsure of the stock market. I'm still kind of bullish about it, but not entirely sure. So I just switched my portfolio to more of a dollar cost averaging mode. Yeah, I don't really want to go lump sum in that particular stock or that stock. To me, the fundamentals have yet to catch up to the pricing at the moment. So I'm kind of a bit iffy about that. So might as well just dollar cost average and don't want to worry about it. At least that's my approach to the market.
Yeah, and look, I think you've actually raised a really important point there, to be honest with you, Lloyd. So one of the things is the market is quite bright. And guys, folks out there, if you're listening to this and you're thinking, well, hang on a second, all these blowout earnings and yet the market doesn't go up. Well, don't forget the market discounts a lot of that. So for some period of time, it's been thinking about these blowout earnings. It's been expecting these blowout earnings. The economy is recovering. It's been expecting that. So the market has discounted a lot of these great results and the economy recovering a number of months ago. And it's pushed onto valuations that are stretching even that thesis, right? And there's the thing, right? So anything that goes slightly wrong here would add fuel to a fire of oversupply. So there's two things at play, right? There's the fundamentals, And there's also the demand-supply balance. Right now, there's a lot of paper in the street, and there aren't as many people as you think to absorb that paper simply because they've already got invested. So we'll see what happens. I suspect the demand, supply, and balance and a catalyst will lead us to maybe a bit deeper than a 4 or 5% correction, but who knows? We'll see. Nobody knows what the future is going to hold, but I'm just really cautious from here on in. I have been for about 4 or 5 weeks now. This is probably the time when I think if you're looking at a decision point and an inflection point, we're pretty much here.
Okay, thank you, Julian, and I share your sentiments. With that, I will invite Alexis in and let's see what she can provide us with the fundamental side of the market. Hi, Alexis.
Hello, hi guys. Yeah, all right. I think what Julian mentioned about follow through was really interesting because we are at an interesting, probably period. And I think what is interesting as well, let me just share my screen, is if we look at just the statistics for the GDP figures, it pretty is quite interesting where the US and China is at the moment. And as you guys know, I'm a big fan of monitoring the China market because I do think it has a very close relation to the Aussie dollar. So that's why I keep a close eye on it. So it's interesting because the last, I would say the last quarterly GDP news from China is very muted. All right, it's 0.6%, and if we compare it based on what it has been enjoying post COVID recovery, it's been averaging about 3% ish, and then suddenly it dips down to 0.6%. It kind of is makes me wonder what's happening over there. And you can see that the US also has very healthy quarterly GDP figures, which also again might be also due to the investment side of things where people are spending so-called spending money and pouring money into the stock market. So that being said, we have over here again. I like to look at the CNY USD just for reference just to see where everything is at. So if you see the Chinese renminbi against the US dollar, it has been strengthening over. I'm going to change to a daily time frame. It has been weakening. Probably for the last Friday, it has kind of reached a what seems to be a high test bar looking ish. So it makes me wonder with all the news that's coming in whether or not there's a potential softening of the renminbi in terms of a correction of sorts. And if we flip it around and just look at dollar CNY, okay, you can see again it's at a very interesting level. And if we compare the CNY USD CNY figures just to see in terms of chart patterns, we're just going to flow through the Aussies. And I like to start with the Aussie dollar. Very range bound, all right. But if we just scroll through the entire Aussie, you can see that there's a question of whether or not this depression of the Aussie dollar will be a follow through. And also in the news, there has been news about how China is looking at has set for its birth month since this is March 31st. So basically, China has had a very bad end of March. And then we look into this that came out in January. So there's a lot of news about China versus the USD and how it reacts to it. So with the stock market rising and with China's closed door policy where there are not many assets in terms of not many opportunities to purchase investments or purchase stocks on the China market as compared to USD. It makes me wonder whether or not the renminbi will have any further upside to go to. So follow through is interesting for me this week because we have news like this coming out. This is a bit more recent, April 14, I think early last month. So we have things like the digital currency. So China has its fair share of news in the market. And it's interesting because we are talking about China's strength, and China's strength has been there since, I would say, this is April. So April onwards on the daily time frame, you can see it's just had very nice big strength over here. And my question is whether or not this strength will follow through into the next week. Will it see it? Will we see the CNY continue towards the probably previous horizontal highs over here, in comparison to the USD? Now that Biden is in power, now that I think Biden is less. Is probably more forgiving of China as compared to Trump in terms of his trade policies. So my question again is, will the market be able to, pick up against the US dollar and break through this area into the previous highs? And if it does or does not do that, then can we take advantage of these moves via the Aussie dollar? All right, so the Aussie has pulled back a big amount. Okay, and my question then is, what is leading the Aussie market, or what is lagging the Aussie market? So what's in front first? All right, again on Aussie Kiwi, you can see a very nice bullish bar over here. My question is then, will the China renminbi be able to pull up this entire segment? All right, will this entire segment be able to be pulled up by the China market? And if you look at Aussie dollar, again, it's a bit shaky, I would say. Since April, from April onwards, it's a bit choppy, but the general direction is still towards the upside. So if the RMB on, let's see this chart, okay, if the renminbi is able to break through this area, right, can we see the Aussie doing the same? Of course, leading first by the Aussie dollar, the common currency base, whether or not the Aussie dollar can break above this level, and will the general Aussie strength follow suit as well? All right, so this area is interesting for me as well. Okay, um, and of course, we had a pullback last week. Okay, once a pullback. So again, I'm looking for opportunities next week to long the Aussie. But again, the follow through is there, question mark. Will this be able to follow through? Will this be able to follow through and bounce off this so-called upward channel towards the upside? Or will this currency break down, all right, and start to waver? Because on the CNY side, okay, you can see also that there is a little bit of a pause. I would consider this a little bit of a pause because we are reaching area of previous highs. All right, so this is my question mark now on where this will go. And again, I think Monday is a very good day to kind of watch and see whether what candle this brings us. I mean, if the CNY US dollar gives us a nice bullish candle on Monday, then I would say there is a good probability that the Aussie, that we will see continuation, or in fact we will see a bounce off this level, all right, of this level towards the upside. So Monday is an interesting day for me to watch the Aussie. um, that's all for me, Lloyd. I've been really busy lately, so I can't watch all the pairs, but my eye is always on China and the AUD for easy correlations.
Thank you, Alexis. Sometimes I also find my trading does actually improve by a lot, or for that particular amount of week when I start concentration on a few pairs. Yeah,
Yeah,
does give you actually in-depth knowledge about how they actually move.
yeah,
Now, with that, I'll have to put in Ash and see if he can give us some numbers to actually correlate with what Alexis has just mentioned. Hi, Ash.
Hello, mate. How's things?
Busy for the week. You know what it is about.
I certainly do, mate. Yeah, don't envy you at all. Okay, I will share screen. I think what everybody said so far, this week I completely concur and agree with. Particularly what Jules is saying about the movements in the stock market, which are fascinating in a lot of respects, because it sends you a very clear message. Now, you don't really need to know why the stock market isn't going up on decent numbers, because you just have to think about if the stock market isn't going up when the numbers have been so stellar, then that's concerning. You know, that's got to send up some kind of warning to everybody that the momentum to the upside is not going to continue off the back of these good numbers. So, as Jules says, it suggests one of a few things actually, but certainly we can assume that either people are already fully invested, or they are just not bothered about the numbers that are coming out, because there's something else in the background that they are more focused on. Now, at this stage, we don't really know what that is, but there's been a few things actually recently with the stock market, and it's gone right across markets. You know, with the crypto markets as well. Yes.
Hate to interrupt. Just want to ask: are you actually sharing your screen?
I should be. Yeah. Am I not?
I'm looking at your Chrome, your edit post or something words.
What is it? Sorry?
I'm actually not looking at any charts from your side.
You're not looking at any charts. Okay, mate, no problem. Let me try this. How's that?
There, we have it.
That's better. Okay, so we've got the COT report up here. Yeah, no, it could be something to do with it could be something to do with the Biden announcement about hiking up the taxes and also the kind of global, potentially the global agreement to for everybody to fall into line on corporation tax as well. So there could be something like that going on. It could be just the movement has been priced in, and when you see the movement in the stock market, then that would appear to be quite sensible, a sensible assumption. So let's look at the dollar now. I want to focus on the dollar more so than any of the others, because the others will then fall into line with it. And what we've really been seeing with the dollar is this inverted head and shoulders potentially being created here. You can see that there's a possible right shoulder here. And also when we look at the COT data down here, and just have a look at what's just been happening with the net longs and shorts. The longs aren't really coming into play. You know, there's no signal here that we should be going long dollar. And if we look at the shorts as well, then we've got pretty much no signal that we should be going short dollar either. So that looks like it's in pause mode, which really starts to agree with what we've seen with the markets recently, where it has been fluctuating around and it's not really sure which direction to go in. But the dollar could be bottoming out. You know, there's very little in the way of selling pressure with the COT data. That looks like it's subsided somewhat. The long positions haven't really picked up, to be fair. But when we look at the seasonal charts here with the dollar, what we see in May is quite a bullish period. So if this COT data starts to support a bullish period right the way through to around about the end of May, the start of June, then we can start being a bit more comfortable with saying, okay, maybe the dollar long is the currency to play these other ones that look weak against. And the most notable with the ones that look weak is the pound, because look at what's been happening with the pound. The COT data now, the index is down here right at the bottom, so it's hitting zero. And if we compare, you know, what tends to happen when the index hits zero, we see a big move to the downside here. This period here was almost just a bit of unwinding, getting ready for the final push here. And we see here as well, there was a couple of weeks of downside, three weeks of downside there before having a little push to the upside, but then a big move down. So we are down the lower end of that. And we are, and if you consider where the price action is, it's pretty much right where it was before the last big dip. So this is suggesting some pound weakness here. The COT report is not showing us heavy pressure. What it is saying is that the net shorts are outgunning the net longs right now. So that the longs are the green lines down here, and you can see very little interest to the downside, not a huge interest to the upside. So I'd want to see that spike a bit more to give us a really clean signal. But it's the seasonals really with the pound that start to look a little bit menacing really for the pound, because this again, you know, if we were to compare this in the opposite direction to what's happened with the dollar, this is suggesting some downside throughout June. So it's difficult to know whether the timing is there. What's going to be the driver? The UK has got, you know, relatively good control over COVID, and the numbers are good, you know, but the flip side of that is the numbers are also very good from the United States. Now, last week Fed Chair did say that that there would be no change of policy, so it looks like the accommodation will continue. But at some point, you've got to think, well, that's going to be quite dangerous. You know, relatively soon to just sit on your hands when the data continues to come out and be so positive. So watch out for the data, because I suspect there's going to be some positioning. Now, remember, people will position between 12 to 18 months in advance. So if the numbers continue to be good at this particular stage, then the likelihood is people will be accumulating the dollar with the mindset that, you know, in 12 months' time it's going to be at some kind of peak. So I won't focus on any of the other currencies right now, but I will tell you that the Aussie dollar also seasonally is pretty weak, and the Kiwi is atrocious. Is heading into a pretty atrocious period for itself. So watch out for the Aussie, potentially short. Watch out for the Kiwi for some potentially short. Certainly watch out for the pound short, and watch out for those dollar longs against some of those currencies as well. and we'll see where we go. And now, of course, if there's a move to the downside with the stock market, the yen is likely to do well, and the yen is also providing some pretty good COT data to suggest upside, and some seasonals that kick in and around about middle of May. So that is me, mate.
Thank you, Ash. I'll always remember your words. I'm still interested in COT, just I haven't really spent the time to learn them. But I think one thing that struck out for me when you told me about COT is that COT does seem to have some sort of predictive ability. It's just that the timing is of the essence. We need to include something to actually specifically time our entry.
Yeah, absolutely, mate. Yeah, I mean, it's really kind of building the picture, and significantly, I think this week with the COT data is it's not particularly extreme, and those messages don't tend to be quite as positive. But what we can do is then start to shift onto seasonals and fundamentals and say, okay, as long as the COT data doesn't suggest go in the opposite direction, then those particular currency pairs are okay to trade.
All right, thank you, Ash, for that. And with that, actually, I don't see Ainsley in the room. Yeah. So
Hi, how are you?
Oh, Ainsley just entered. Hey, Ainsley. Yeah.
Hang on. Here I am. Hello, everyone.
Nice to
How
see you. All right, so now we'll move on to Ainsley. Any updates for gold for us? Seems like gold is having a higher low. Is that a good news for you?
Look, gold's been a little bit. Ash, are you okay for me to stop your screen?
Yeah, you go ahead. You grab away.
I will. I've got some very noisy dinner mates at the moment, but anyway, life goes like that. Where did my screen go? Hang on. No, that didn't work. That didn't work either. Hang on, 2 ticks. Oh.
Ainsley, do you want me to bring up a gold chart for you?
Hang on. I've lost my Zoom. I'm doing a bit of an Ash. I'm sorry. All right, Lloyd, can you just keep talking to me for just a tick, because my meeting controls have just gone completely.
All right, sorry, what do you want me to do?
Oh, sorry, hang on. Just 2 ticks. I had my screens up ready to go and they've just disappeared on me. Sorry about that.
I guess that's the trouble with playing with too much screen.
I was waiting patiently. All right, let's get a gold chart. Are you seeing a gold chart? Are we sharing that?
I'm looking at WTI, H4.
I can't get my the meeting controls have just disappeared on me. I'm actually, now I know how you feel, Tal.
Yeah, it's pretty bad. Do you want me to do the gold for you, Ainsley?
Hang on. Yeah, Ash, pull up a gold chart for me, darling.
Yeah,
please.
No problem. Okay.
It's just, I lost it completely as far as because there's not a lot to report on the gold, unfortunately, but thank you. My chart's just gone to, I'll get it ready for oil, but there's a gold chart. If we just drop down to a 4-hourly, please, because what we did, if we do the 4-hourly to start with, we can see that there's just been up, down, and sideways. Now, I'm assuming Julian's explained the price action that occurred Thursday night and into Friday. So we had a really good move up, and we can see that on the daily. We had a good move up, but then there was a spike. We've come back down. It's not been exciting, and that major move down on Thursday morning early and into Friday, because I'm just looking at the end of Friday. It was all in relation to what happened on the S&P. There was a big move on the S&P and some orders going through. It wasn't actually related to the US dollar. It wasn't actually related to anything else other than what was happening on the S&P. The S&P didn't help at all. So unfortunately, we had this huge move down after we had a really good, it was starting to move up. We had a higher low, we had a really good move, and then we just started to drift back down, and we're back down into this horrible consolidation area. It's almost like we've got another box. And if you actually, that high to the left, Ash, if you just went straight across and put a line, no, far left, down, thank you, there. If you did a line across there, where do you think that, just about there. So in that zone, we've had a bounce back up from there, from that 1755-ish area, back up, and we're just stuck in this blooming consolidation box yet again, another one. It's not giving us the traction. As I was saying the other night, the stimulus checks have all been out. They're all out in the marketplace, and or not, or they're in savings or whatever. But what we've got here is it's just not going anywhere. Again, the big drop, as I said, on Thursday was definitely related to what happened with the S&P and on the Dow Jones, straight down. It's not exciting, is it? It's got nowhere to go at the moment. We've got no direction. We're back in this box. It's really unfortunate, to be quite honest. So at the moment, gold is not a good one to go with at all. Ash, do you think you could throw up a copper chart for me as well? Copper has become my new little friend. Now this is a 4-hourly chart, and yes, we've got some consolidation happening here. The fundamentals on copper is very exciting to me, and it's very interesting. It's also a shiny metal, and it's also something I'm interested in from the point of view of where we're going with. For anybody who doesn't know, copper is required, is a component for batteries for storage of solar energy or green energy or electric vehicles, for example. We need copper. The demand for copper is, if you go to, even if you flick to a weekly chart, Ash, thanks, look at that. It's been pretty impressive for the last year. It's gone straight up, basically. Will it continue? Yes. From all the reports I hear, copper is something to keep an eye on, guys, and it does trade nicely. It goes up to certain levels, it comes back down, there's profit taking, as you would expect, but generally speaking, I believe the demand for this is going to continue into the future. I think this is something that we need to keep an eye on. So have a look at that. In addition to gold, diversification, because you can't keep, with gold, I've got a lot of consolidation. It's not helping me at the moment. I need to look at something else to trade, and copper has come to the top. Lloyd, are you okay if I do oil right now?
Yeah, sure, Ainsley, go ahead.
yeah, if we can do oil, because oil's had a horrible week this week, and it started off going really, 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 really well all week. If we drop down to a 4 hourly, thanks, Ash. Yeah, so we had a really good push up. Things were looking good. We had this whole idea that with COVID and it was under control, and things were really looking under control as far as OPEC and Iran and demand, and keeping everything in check with OPEC plus countries. That was really taken into account this week, and we've got some really strong moves that we've been able to take advantage of here. Where we've had a really big pullback was the reaction to India and what was happening in India. India is the 6th biggest global economy that we've got going, and unfortunately the terrible situation we've got in India has actually pulled this right back. And yeah, people just didn't like it. The investors didn't like it. We saw a really strong pullback on oil from Thursday night Sydney time, and until Friday and until Saturday morning, where it just sort of chuckled up. But it did actually, it clipped $65 a barrel, which was amazing. But it didn't actually close, and it came back down, and that's the way it goes. So that's okay. But we know on a seasonal basis, we're going to be looking for some more moves in a strong manner back up out of May as well. So May is good for oil to keep going. So we'll see where we go with that. So that's me. Thanks, Lloyd.
Thank you, Alexis. And thank you, Ainslie. Got mixed up. And thank you, Ash, for the assistance. And thank you, Ainslie, for providing us your second love, your new shiny copper friend, Copper.
Yeah, Copper, my new friend. Not quite as illustrious as cryptos or anything like that, but you know, we're getting there. See you, Shukri.
Bye.
All right, so with that, we'll hop on over to Shukri, who has been giving us, I think, pretty good news for weeks after weeks. And what's up for us this week?
Okay, let's look at the chart, but let's not look at the chart. So you guys will learn something about crypto today, which is more important than the charts. To me, the charts are always the validation. You still want to look at the charts, but let's look here. I think I've been talking about this, right? If we fall below the 50 moving average, and that was a dangerous signal. We were supported by the 100, but a test of a bull run, which happened in 2017, is that if you fall below the 50, it takes 12 days to recover. Let's count. 1, 2, 3, 4, 5. Wait, let me count again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Bang, there she goes. Recover back again and into this zone again. So again, these statistics work because why? Because crypto is on-chain. Everybody knows what everybody is doing, and patterns seem to repeat and repeat and repeat and repeat. So that's why caught in Bitcoin tends to work very well, but there are also statistics like on-chain. And look what happened last week's call. Yeah, right on the money, right? This is Ethereum. Look at that, almost 3. So, you know, you could see it last week that, yeah, it wanted to hit 3. It had this desire to really hit 3. It was almost there. I already took profit on my position. But the thing is, I've always said, you know, that this was a delay because of the Sunday crash or whatever, and the Biden tax. Yeah, this is the Sunday crash. This is the Biden tax. But it always wanted to do it. It did it on the 3rd try. So again, what is my pick today? It's based on patterns. I'm just going on patterns, okay? I like Polkadot. Yeah, this is a double bottom. Now, you can interpret it in whatever way you want. So I'm looking on Polkadot. Why? Because the last time Ethereum pumped, Polkadot followed. So my pick this week is Polkadot. But again, be cautious because we are going to have the D-Day. And next week, I'll tell you why we are going to have the D-Day. I'll be again in Gordon's channel tomorrow. And also, this is due on May 14th. So just be careful of that. But this is, I'm just following patterns for this week. That's it, Lloyd. Simple patterns. Happens again and again and again. The market isn't always the same, but in crypto, it rhymes. Like 90% rhyming, okay? Go back to nursery school and learn.
Thank you, Shukri. I really like that. it follows through, and the patterns is always repeating itself, and simplicity works.
Yes, very simple. Don't make it too complex. I know you hear all this pump and dump and all these things, but just stick to the patterns. You will be okay.
Thank you, Shukri. That has always ring true to me. And now that you say it works for crypto, really happy to hear that. All right, so with that, I am up for the next section. Yeah, so the previous week has been really actually kind to me, I would say. Let's have a look. So just some trade reviews. I was actually going on for Euro Yen long. So indeed, on Monday, price actually went up. We tested the zone, and I got my 3:1 risk to reward ratio, which is hooray for me. Dollar CAD, also another trade which I spoke about last week. Same thing, price broke, retest, and then it flew down, got another 3:1. The Aussie Kiwi is the one that I did bang in some profits, not as much as I like, but it seems to give me another re-entry opportunity this week. Tested the trend line again. Yeah, so I might have a trade on for Aussie Kiwi Monday early morning. Yeah, so what happens was price actually did test, went down. Yeah. And then when price went down, I actually shifted my stop loss to entry, then shifted down a bit. So, but price actually broke out of the support area. Yeah. Then I got knocked out for just a bit of money. Yeah, at 1:1, which is still a good thing. Overall, still a good week for me. Now, for this upcoming week, my analysis didn't change really too much. So let's have a look at CAT. So when you look at a weekly chart for CAT, yeah, I did mention last week that CAT, Monday morning is going to be really important for me. And same thing, if it follows through, break out above, I'll be really bullish about CAT. Yeah, so this is what's happening now. It breaks above $80. Doesn't seem like it's gonna be anytime it's going to retrace. Yeah, so I'm gonna be still be bullish about CAT for this week. Yeah, until price says otherwise. Now Euro is gonna be an interesting week for me. I can see a lower high, first lower high, second lower high, but it's gonna hit $120. Yeah, so this will be a major horizontal level for me. So Monday afternoon. Yeah, when the London session opens, we'll be really keeping a close watch on Euro to see whether it bounces off 120. If it does, I'm still going to be bullish about this pair simply because 120 is a really strong level for me to trade off. Yeah, but if it actually closes below for the first 4-hour bar or even the daily bar, that means on Tuesday morning, then I'll be bearish about Euro. Yeah, so let's keep a close watch for Euro. Swiss, seems that I was quite reluctant to trade Swiss last week. Yeah, but overall, I'm quite bearish about it. It didn't really quite hit the horizontal level. You can see that it's a bit of a wick appearing. Now, wherever, at the risk of repeating myself, when price doesn't show any conviction at a horizontal level, I will tend to stay out of it, especially now that we can see a wick appear and it's several cents short of the horizontal level. Yeah, so until price shows me that it's going to be bearish, yeah, I won't be bullish about Swiss at all. Yeah, unless there's some bearish signs that comes up, I won't be touching Swiss. So Kiwi is the one that also interesting for me. You can see that this will be the tops, and then it seems that this engulfing bar is forming a lower high. Yeah, so I'm going to be cautiously bearish about Kiwi. Yeah, it doesn't have much space to run to $70. Yeah, if I can put in a position, I'll probably do so, but I'll take a quick TP once. Yeah, take a partial profit off. Yeah, don't want to risk running straight into $70 and then bouncing it off. Again, $70 is really a strong horizontal level for me. Yeah, don't wish to trade into such level without any sort of protection. Now, pound, I've been saying that pound probably will range at the $140 level, and it did still not giving me any strong conviction where it wants to go. But overall, I will be bearish about it. Yeah, very similar to Aussie, in fact. Yeah, so why is similar to Aussie? You can see that price has been ranging in this box for quite some time already. Same as Aussie. You can see that it actually ranges in this. Yeah, I don't think it's a good idea for trend traders to touch either of these two pair unless you get a really, really strong or weak currency that pairs against it. Yeah. Otherwise, pound and Aussie on its own, I think you'll be ranging. Not a particularly strong or weak pair to trade with. DXY, bearish, come back, retest the horizontal level, not a particularly strong one, but still I will deem this as a horizontal level. So Monday morning to actually to evening, yeah, when the US market opens, I will see whether there's any bearish follow through. If it does, I'll continue shorting the DXY all the way to $90. A bit more space to run up. So in this instance, I'll be really conservative. I'll take a TP once. Yeah, I won't really go into I won't be hoping to score a multi risk to reward kind of trades. The last on my list, yen. Very nice, perfect touch of the horizontal level, went down. Nothing much to be said about this. I'm still going to be really bearish about it. Now, with that saying that this week, the currencies that I'm going to short actually didn't change much for last week. Why I say that, if you look at Aussie Kiwi, like I mentioned, seems that it's going to give me another opportunity to enter with this get rid of this level. Yeah, so Monday morning, I might be placing this trade. Yeah, just going to observe a bit for the hourly. Yeah, see if any bearish strengths that comes in. If it does, I'll just jump in and short this pair. Yeah, same thing going for 3:1. Now, dollar cat, good trade for me last week. I'm seeing that if this week, sort of consolidation on Thursday to Friday. Yeah, so I'm just waiting for any bearish strengths, any bearish candles to come in. Again, I'll be shorting this pair. Yeah. And then the last, so these are actually similar pairs to last week. The last is actually still Euro Yen for me. Pretty good trade for me. I'm just waiting for retracement to this level, and then I'll put in a long position. Yeah. So no changes to my overall analysis. I'm still keeping constant, which is rare. But at times when I play out like this, I'm really happy just to, for swing trader, just to see once I collect the tips. So with that, this week, we are going to try something new. Geoff is not joining us, but Geoff is also joining us. Yeah. So I have to travel Mike to actually play his video and see what Geoff the technician has for us this week. Go ahead, Mike.
Hello, everyone, and welcome to the Technician's 2 cents worth for this week, which, of course, is the first week of the much maligned month of May. Let's get into it, shall we? First up, I'm going to have a look at what we were looking at last week, as a matter of fact, which is Euro Pound. We noticed on the weekly chart that we had a key reversal bar on the previous week. Oh, hang on a sec. Got a little bit of an issue. There we go. That big bar there, that key reversal bar there, looks like we were followed by an inside bar. Technically not correct, because the high of this one is a little bit higher than that one on my chart anyway. That would make it all the better, but generally speaking, if it looks like a duck and it quacks like a duck, it generally is a duck. So I'm going to go with it, and I'm going to place an order above that bar and my stop loss below that bar, a few pips above, a few pips below, just to clear the mess. And providing there is no gap in the morning, that's exactly what I will do. I'll put that order in the market and look to trade Euro Pound long. We spoke about it last, well, Paul spoke about it on my behalf last week, and it looks as though it may well follow through. The second one I'm looking at is Pound Yen. Pound Yen, a little bit of shape about it here. We've had a long, protracted rally, and it looks to me now like we might be in for a little bit of a retracement up, followed up by a potential lower high here, and a bar I do like to trade. Actually not going to trade that. Instead, I'm going to wait on the daily chart for a clearance of here, I suppose. These pivots are all going to change, but I'll be looking for another lower high based on that little double top there, I suppose. So I'll be waiting on that one, Pound Yen, but I do like it for a short. Euro dollar is another. Now, Euro dollar very, very clearly for me has got the potential for this false break. That's the daily chart. It's also got an already formed false break on the monthly chart. You can see how we've broken through, consolidated back underneath, and then retested with a big bullish bar there. That's an absolute classic example of a false break. And for that reason, I am bearish this pair. And we bounced off that ascending channel. I think any form of a pullback here on the weekly chart would look good as well, but the daily will be the first option for me. And if I see tomorrow morning, or tomorrow, at the end of tomorrow, and Tuesday morning, a bullish engulfing bar here, not engulfing bar rather, a bullish decisive bar, or decisive bullish bar, if you want to put it that way, then I will look to trade this short. So that's all I need to see on the daily. I'm not sure I'd be willing to trade it on the 4 hour, but if it does set up, then why not? It could well be the 4 hour that we need to trade. There is a big false break potential here if we do get a bullish decisive bar there as well. Next one I'm looking at is Kiwi dollar. Now, Kiwi dollar on this the daily chart looks very much like a reversal of that retracement of that move. If we go to the weekly chart, we can see clearly that we have a key reversal bar, and that is followed up by that key reversal bar which worked, that key reversal bar which worked, and here's the third one at a significant level. I'll probably look to trade this straight up as a weekly as well. Don't necessarily like trading black bars short, as you know, but if that's the case, then if there is no gap in the morning tomorrow, then I probably will look to place that order short with a stop loss above it. So that's Kiwi US dollar. On the daily chart, we may have to wait for a pullback and get that lower high based on this one before we do enter, but the weekly looks good. Dollar Sing is also on my watch list, not wish list. The weekly, which of course is the one we look at this time of the week. Big double bottom sitting there and a key reversal bar. Not that keen to trade it at the moment, but if the daily chart gives me a pullback similar to the others that I've described, then I think that's probably a worthwhile long in the market. There are two others that I'll briefly go through. Euro Kiwi is one. We attempted to trade Euro Kiwi long on a smaller time frame on Wednesday, I think it was, maybe Thursday, and we got TP1, but the trading stop was hit as we bounced off those pivots. I'll be looking for the daily chart to break that area there. I don't want to trade the breakout as such, but the weekly is very, very clear to me. This big reversal bar, higher low, higher high. The higher low is the question mark, but that bottom of the range is interesting. So the smaller time frames, maybe where we look to pick this one up, maybe even down to the 4-hour and even hourly charts. So, you know, higher low in here would look interesting. And the last one I'm going to look at is Aussie dollar. Aussie dollar, interestingly, inside this range here has come off the top of it. So we'd be looking for a lower high there to trade short. I think I'd prefer it to come back inside this range, however, the ascending channel, and then give me the lower high there before I look to trade it. So this could be a bit tricky. I think I'll be waiting for that to happen. Back inside the range, retest the top of it. It looks very, very formidable and reliable is probably the better word I'm looking for there. So let's get underneath it again, retest it, and then we can go short. So there you go. The much maligned month of May begins tomorrow, trading-wise anyway. And that's my 2 cents worth for the week. Enjoy.
All right. Thank you everyone for joining us this evening. Have a happy and safe trading week ahead. Goodbye and see you again next Sunday.